At this family-owned jeweller, demand for gold is dazzling.
People are rushing to buy their jewellery. They rather get the jewellery that they're gonna need in next year in advance to be able to buy it with a more cost-effective price. These are made in Australia.
Amir says in uncertain times, consumers see gold as a safe haven.
People are getting aware of where is gold going, which direction it's going, and they don't want to miss out.
The price of gold has risen more than 50% in the past 12 months to almost $4,000 an ounce. UBS forecasts it will reach $4,200 by the end of the year and stay there for most of 2026. Analysts say global factors, including the US government shutdown and risk of recession in the world's biggest economy, are driving the gold price higher.
Gold is an excellent hedge against inflation. It's also a hedge against uncertainty. Another reason, interest rate cuts are always supportive of gold because it doesn't pay a dividend, it doesn't pay interest. Finally, central banks are buying
as they look to diversify away from US assets.
There's a huge amount of central bank buying that has been driving the price higher. So you've got this extraordinary global scenario where risk assets have run very hard, but geopolitical risk is high.
At Perth Mint, demand for gold isn't just being driven by central banks. In the past fortnight, there's been 7,500 customers queuing a week, many lining up to buy gold bars.
On a daily basis, we're having to close the queues around 3:30 p.m. so that we can cater for the volume of people that are coming through to buy gold or to sell their old jewellery.
Gold is set to overtake LNG to become Australia's second most valuable export after iron ore.
Production of gold is expected to increase. That's one element to it, but also, more importantly, the price is expected to be stronger and stay strong.
Global demand for gold jewellery fell in the year to June, according to government figures. It's gold bars and coins that's driving the boom, with investors also turning to exchange-traded funds to get exposure to this precious metal.
We've seen something like a tripling of exposure to those kinds of ETFs over 12 months. We have not seen a tripling of any exposure to many other things over the last 12 months.
But Amir's worried that at some point the price could tank.
The price of gold is going up so fast, and if it crashes at some point, it would be hard to recover from that crash. So I would rather have a more stable market.
For a commodity that's been a staple of the global trading system.